Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and all markets closely associated, because right now we're kind of seeing everything move in concert.
Yeah, all the markets
together.
are closely associated.
They clearly are closely
today.
associated.
Except
and
for the
is
dollar,
red.
which is kind of the dollar's association, right?
There you go. Everything's red, but the dollar is green, and I don't mean that in terms of the actual bill. But Rob, you want to give a quick recap of where we are currently seeing prices as we record?
Yeah, we're looking at a sea of red. I mean, silver is at $31.92, down nearly 0.5%. Platinum is down $16 at $1,038, down 1.5%. Palladium $957, down 2.5%. Getting to gold, it's down $23 at $23.37, down 1%. And then a sea of red everywhere else. The Dow, the transports, Bitcoin down $1,000, down 1.5% today. Even Dr. Copper, it's down 1.6% today. Sea of red.
So it's good to see a little bit of rebounding. I mean, we've been talking about some pretty significant moves across the board. In the equities market, I think the S&P put in another new high. Obviously, gold has put in new highs. Gold still sitting above that 2,300 mark is both depressing and encouraging. Encouraging if you're sitting on a significant gold position, depressing if you've still got to buy groceries going forward. So such is the nature of inflation. And the dollar having a little bit of a rebound. You know, the dollar's been still sitting in the same trading range for 18 months now. So it's been a pretty big range, but we haven't seen much of a breakout one direction or the other. But as it's been sitting in this relatively tight trading range, well, I guess it's not tight. We're talking 5-6 points here up and down, but still at least stable, which I think adds a little bit of credence to the argument coming out of the Fed of trying to keep things relatively stable, which it appears is mostly occurring on a long timeline with the U.S. dollar index internationally. We're still looking at the S&P at all-time highs. We're still looking at gold pushing into all-time highs. We're still looking at silver over $30 and still holding even as we move into summer. That's the one problem I have with using the dollar index, you know, the international dollar relationship basket of currencies index as the thing we go back to, because you can have a dollar index that stays stable while China's buying gold and running the price up.
Right, all because of one country doing shenanigans at a higher level than we are. You know, this is the Bank of Japan seeing the reality set home on its economic and fiscal policy, and that's going to alter things for the U.S. dollar. But who'd have ever thought that we would be saying silver down 0.5 point to roughly $32?
Right.
Gold, we'll take it.
Not a few months ago.
No, not a few months ago, right? So we're excited about that. And the ratio, the gold to silver ratio is another thing that's, call it in the red. We got down below 73 to 1. And here today with gold, Rob, you just said, is down 1%, silver down 0.5%. That's still tightening the ratio.
It is.
Yeah, even with both markets pulling back, because the argument certainly has always been that silver does whatever gold does, just faster and more aggressively. So the fact that they've both turned, but that ratio is still tightening, is definitely interesting. And we're not too far away from that kind of historic rising average, you know, that rising ratio channel that we kind of come back to every couple of months when we look at the 30, 40-year chart on that. So, 58-ish is not too far away from 70 when you've been 120 in the last 2 years.
Well, in the last 2 months, we've been in the 90s,
right,
and now in the 70s. And that's the most exciting part, is we don't know where it reverses. We have to be in communication so that we can ease out of silver and into gold as that ratio does tighten. And so we need to be having those conversations, but it could turn on a dime. I mean, imagine if something geopolitically happened again.
Yeah, and then gold takes off and leaves silver behind, and the ratio swings back into the 80s just quickly. And because we're kind of bouncing along that bottom trend line for the ratio anyway.
Mm-hmm. That long-term trend line. I mean, you're talking like a 10-year floor.
Yeah, like a 10-year trend line. We're at that trend line right now. So it could easily skip back up. You know, if it breaks below that trend line, it's going to get real interesting. But who knows?
Yeah, well, and I like what you just brought up there, because it is a week where we're looking at massive gold buying internationally. And certainly continued concerns, not just in the Middle East and Eastern Europe, but also China-Taiwan issues that continue to flare up. It's an election year. I mean, like, pick a direction, north, south, east, west, pick a direction. Something is a tinderbox somewhere, any direction you look. And you have that type of political event take place that just pushes the right number of people, the right direction at the right time, and all of a sudden things get rolling down a hill. And like you just said, governments run to gold, and we, the civilians, pick up the scraps in silver when we can. And if we were to get something like that, where let's say we get a gold-silver ratio pushed down into the 50s, you bought at 90, you've got a small potential play there to pick up an extra 20, 30% ounces. We have a political event and that ratio pops right back up to 90 again. Well, this is how you take advantage of things like that.
You compound the ounces over time while you're sitting in your hedge,
right?
And all of those scenarios are realistic. Yes, it's an election year in the United States. There is a perceived weakness in U.S. leadership, obviously. And so does something happen before the election? Do these drills turn into the real thing one day prior to an election while the taking is a little bit easier? I mean, we heard from John Loeffler earlier that he's talking about all of this gold being acquired by China as if it's in advance of that reality setting in.
Sure. Well, they know.
Well, but
of
at the
course
same
they
time,
know.
Of course they know what they're doing. I mean, the East has been buying all the gold anyway, putting a floor in our market. And as part of the reason that we're not pulling back, I'm still optimistic that we can see a little bit of a further decline here in the summer. But Putin is now saying that he would accept a ceasefire with where current borders are. So you may actually have the opposite effect. You may have a cooling of geopolitical tensions this summer, which would coincide with the seasonal bias of metals prices coming down, right? And then you actually can see a calming of the waters, let everybody focus on the U.S. election, nothing to see here kind of thing. And
Sure.
Then the fireworks could really start afterwards. Who knows?
I like it, and that's a very strong possibility of all of the above.
Well, and I can tell you, having gone through this now a couple times, like we all have over the last 20 years, I don't think anybody would be unhappy with a geopolitical cooling. It's hot out there. But on the flip side of that, as an American consumer, does concern in geopolitical cooling pull the price and the cost of living back down?
Well, that would be the biggest win. I mean, in the third front of this war is obviously Israel with Gaza. They're finally in Rafah. And you are nearing the end of that, like mission accomplished, where they're even at Egypt's border with these tunnels, right? So you literally are looking at a potential sunset of the mission that Israel has set out to accomplish all along, and that could time very well.
Well, yeah, and they just drove their tanks into the middle of Gaza and now are beginning to work their way out from town center. Totally different strategy than what people have seen in the past. Not for Israel. They've done this before. So the big question is, where is Iran? Because, you know, it wasn't that long ago they were squaring off, and Iran has suddenly stepped back from the precipice, and they are not in the mix at this point. So there's a great likelihood for a cooling, and I think everybody would welcome that.
Sure. So sounds like the sea of red is not necessarily a bad thing.
Yeah, good point. And meanwhile, the narrative really hasn't changed. We sound like broken record radio here when we're talking about inflation and, you know, obviously interest rate conversations at the central bank.
Hey, when the government changes their game plan, we'll change our show.
Yeah, there you go. For now, it's overspending through the Treasury. It's overprinting. It's obviously overlending from a central bank standpoint, easy money, and interest rates being stuck. They can't increase them. They can't decrease them on the Fed lending rate. And so everybody's kind of in this watch and wait type of a deal. And again, when that happens, markets tend to cool a little bit. There's less volatility. There's less uncertainty. And I just still hoping for that gold pullback back down below the 2,300.
So that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. If you liked what you heard, hit the YouTube buttons. We really appreciate it. Better yet, why not give us a call? We're happy to talk with you about your personal precious metals portfolio. We can be reached at 800-525-9556. You can also find some additional information off our website at McIlvaney.com. We're on Twitter at ICA Gold or Facebook at McIlvaney Financial. Thanks again for listening and have a great week.